1 minute after 1 o'clock on October 3rd of the year 2022. We're reconvening the City of Fitchburg Board of Review. Madam Clerk, has the meeting been properly noticed as required under Wisconsin statutes?
It has been noticed. It was noticed after we adjourned on
29th?
on the 29th. Yes, last Thursday. Thank you.
Thank you. Would you please, I'll call a meeting to order then, since it's been properly noticed. Would you please do a roll call vote? A roll call to make sure we have a quorum.
Certainly. Chair Couliard.
Here.
Alton Krim Jr. is absent with excuse. Sean Paff is absent. Andrew Sliger.
Here.
Rich Tate.
Here.
Ryan Sieve is absent. You have a quorum of 3.
Sean is here.
Oh, Sean is here.
Beautiful day, and I got to spend it with Gary.
Excellent. Referring to our agenda, the first item up under item 3A, subpoena compliance review that was postponed on September 29th for Seven Oak Creek LLC, 2 addresses, 2800 Mickelson Parkway and 2807. I'll ask the assessor to update us as to what information has been received, if any. And if not, I think the representative is here to answer any questions. Excuse me.
The assessor's office has not received anything pertaining to this.
Mr. Kohlenberg, did you find out anything in talking with your clients?
There you go.
I did.
Do we need to be sworn in?
Just to be safe, since it's a continuation, it's a new day, let's do it just to make sure.
Okay. Gary, raise your right hand. Do you solemnly swear that the testimony you shall give in this matter shall be the truth, the whole truth, and nothing but the truth, so help you God?
I do.
And can you state your name for the record?
Gary Kohlenberg, 345 River Bluff Circle, Oconomowoc, Wisconsin.
Thank you. And assessor staff? Do you solemnly swear that the testimony you shall give in this matter shall be the truth, the whole truth, and nothing but the truth, so help you God?
I do. Amy Mercer, City Assessor.
I do. Craig Olson, Deputy City Assessor.
Thank you.
Thank you, everyone, for taking care of that detail. And we'll get back to the question. Were you able, Mr. Kohlenberg, to gather any additional information based on our discussions from the 29th?
I was. So I was able to collect more information, and here's what I found. I met with my client and with his manager, and we discussed several topics. The first one, can you push a button and create the balance sheet and income statement for Seminole and the Addison for 19, 20, and 21? And the answer is no. So I said, we need to supply these documents, and they have started the process. It is a very challenging process. However, I received some preliminary information for the balance sheet and the income statement last night in an Excel spreadsheet for 2021. The person that is supplying the raw data was not available over the weekend. I'm going to stop by the client this afternoon to see if we can get additional information to meet the Friday deadline. I'm confident that we can.
Okay.
I thought the deadline was the 5th.
The deadline to have it to the assessor is the 5th, that's correct.
By end of, yeah, if I look back on the minutes, the deadline is October 5th at the end of business day, clarifying at 4:30, close of business day in paper format.
Got it. Is that Wednesday?
Yes.
That's correct.
Sure. I'll do everything to get that deadline met.
Excellent. Thank you for your assistance. So I guess we need to have a motion to table the review of the subpoena until our next meeting, which is now scheduled for October 7th.
Make a motion to table both agenda items 3A and 3B until our next meeting, which is Friday, October 7th.
I'll second.
We have a motion and second. All those in favor signify by saying aye.
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 Let the record note it's unanimous to table these items until our next meeting. Moving on, item number 4 on our agenda. Here, deliberate, determine possible considerations for request for waivers for the following objections. Whalen Warehouse LLC, Whalen Road, Branford Kearns, 2186, County Trunk Highway, MM. Madam Assessor, in looking at the parcels, is your pleasure to waive these, or do you want to continue with the hearings as with the board?
These two we would like to, the two on the agenda today, we would like to present.
Mr. Kohlenberg, do you have reasons why you want these waived to circuit court?
No, I would like to present today. And, Mr. Chairman, there was another document that was due. I thought that was on Friday, but I have it with me, and it was an appraisal for the Trey Lee Apartments.
Okay. I guess when we take a break, after we go through some of these, we can make sure that that's properly addressed. Thank you for letting us know that. Okay, so after discussing this with both parties, neither one wants to waive this to circuit court, so the waiving of the appeal, the board will deny. And we will continue hearing these two cases in front of us this afternoon. I'm looking for the form to deny that, but I don't seem to see it in my packet.
Actually, I'm not sure, I can double check a worksheet. I didn't think these had waivers on the two that are on today's agenda.
That's correct. These two did not have waiver requests. It's just a standard title on the agenda.
Okay. Then let's begin. Starting with 4A, Whalen Warehouse LLC, 5933 Whalen Road. Objection form filed indicates that the current assessed value, $281,400. Taxpayer's opinion of value from his agent, $106,500. Before we begin our testimony, just want to make sure everybody is on the same page as to what we'll be doing. Chapter 70 of the Wisconsin statutes gives the assessor the presumption of correctness. The Wisconsin Supreme Court has ruled that to overcome that presumption, you need to present sworn oral testimony proving the assessor erred in determining the total value under appeal. The Wisconsin Supreme Court has given the Board of Review standards of evidence to guide us as we consider the appeal. Those standards are: the best evidence of value is a recent arm's-length sale of the property. Next would be sales of reasonably comparable property. And lastly, all other approaches to value, which is the income approach on income-producing properties and the cost approach on special purpose or unique properties where there's not an active market. At this time, do you have any exhibits that you would like to share?
I do.
Please distribute them so that we can identify them for the record.
Thank you.
Thank you, sir. Thank you.
We have been handed two accounting tables, summaries, and I will mark the first one, which is a reconciling of a building expense statement as taxpayers number 1. And the second one is a property assessment analysis. I'll mark as taxpayers exhibit 2. Okay, at this point, we've already sworn you in. So, Mr. Kohlenberg, would you please present your testimony showing that the assessor has erred in establishing the fair value?
Thank you, Mr. Chairman and members of the board.
It would help us a little bit if you could just describe the property so we know what we're talking about.
Certainly. So the property address is 5933 Wayland, and it is, from what I could see at the GIS mapping, it is a commercial property with 2 pole barns. I want to say one was from the late 60s or early 70s, and the other from the 90s. They're pole barns, and they are described on the assessor's property record card as farm-related or agricultural buildings. I don't have the exact language, but it's on the assessor's property record card. And so what I did to try to find which tier to use, I searched Tier 1. There was not a recent sale of the subject property. So then we go to Tier 2. And when I searched Tier 2, I was looking for pole barn or farm building as the assessor identified on the property record card. I searched Fitchburg, and then I searched all of Dane County, and I found 10 sales that were classified in my database as a farm building or a pole barn. They were either not comparable or they were, in my opinion, invalid sales. So here's what I found. I found related party sales. So most of them were from family member to family member. I found bank sales, and I found sales that included very large parcels of land or parcels that included pole barns with a house on top of it. This is a relatively small piece of land, and it's pretty much consumed by these 2 buildings. My conclusion was there are no comparable sales. So I went to Tier 3. Tier 3, I used the income approach because it is an income property. So I originally had discussions with the property owner's manager or accountant, and I asked them about the income on the property. And what they told me was that historically this was used to rent out space during the winter to people to store boats. And it has not been a lucrative business. So when you look at the income statement for 2020, you will see that the total income for boat storage was $13,370 for the year. And in 2021, June, they found a tenant for one of the 2 buildings. The tenant is a masonry business, and they occupy completely one of the 2 buildings. And they pay $1,500 a month. They've rented it for 7 months. They grossed $10,500 in rent from the masonry building, and they grossed $36.95 for boat storage. So in doing the income approach, when you look at the 2 income statements, the expenses are almost spot on. I mean, there's not a lot of discrepancy between the 2 years. So I used 2021 in calculating a direct capitalization. So if you look at this sheet, it has red numbers on it. I'd like to explain how I calculated the value of the property. So the first thing that I did is I said, well, the 2021 only represents 7 months. So what we need to do is assume that it's rented for a full 12 months at $1,500 a month. That brings in $18,000 gross. And for all of 2021, it brought in $3,695 in boat storage. Remember, 2022, there were 2 buildings. That's why the boat storage was higher. So it brought in $3,695 for a total potential gross of $21,695. And at this point, I'd like to share with you that in conversation with the property owner's accountant, I said, how are rentals going for 2022? And she said, I don't know if we have any, but, it's the kind of thing that they show up at the last minute. And so my guess is if they're getting $3,695 in all of 2021, that's probably what they're going to get in 2022. Going back, we have a total gross potential income of $21,695. Then we have a 5% vacancy, and this is professional judgment. However, it's been vacant a lot more than 5%, or at best, underutilized. So they've been looking for a tenant for a long, long time. I think they've owned the building since 2014, 2014 or 2013, and the masonry business is the first one that has signed a lease. Everybody else has been boat storage, and it just doesn't bring in much money. So when I say 5%, that's generous. So we knock out a 5% vacancy factor. We have a collection loss of $180, and apparently last year there was an issue with collections, and that gives us an effective gross income of $20,615. I'm going to stop here and ask if there are any questions from the board or from the assessor's office. Seeing none?
I do have some questions, not on the income approach, so please continue and we'll get to those later.
So then what we do is we take a look at the total expenses. Total expenses are $13,792, and we add back the taxes because we're going to load the cap rate with taxes. We deduct for market management $1,134. It's 5.5% market management. And you're thinking, well, what's involved in market management? You put a bunch of boats in, it's a pain. Then the guy that you backed in first is the first guy that wants out. You got to be there to move all these boats out. It's a 5.5% management fee, and again, it's low. Reserved for replacement, look at this as economic depreciation. So in accounting, for tax purposes, you depreciate it over a 40-year period. That's 2.5% a year. That's what I'm using. Total expenses adjusted are $9,076. Net operating income is $11,539. Using the prior year's tax rate of 2.3%, I used a cap rate of 8.5% for a total loaded cap rate of 10.86%. So let's talk about the cap rate. So I have 3 cap rates that I referred to in my analysis. The first one is industrial property from Realty Rates Market Survey cap from September through December of 2021 for warehouse and flex space, and that comes in at 8.96 to 9.1 for Wisconsin, Indiana, and Illinois. Pretty broad. So now we zeroed in using the same service, Realty Rates Market Survey. Industrial property for warehouse and flex space from September through December 2021. And that's just for the southeastern Wisconsin area. And that came in at 8.4 to 8.8. And then the third cap rate source I used is CoStar Industrial in the Madison market for 2021, and that came in at 7.17. So this is for industrial space. And industrial space can be all kinds of things. And I can tell you the cap rate on a pole barn is going to be higher than it is in a finished building with a concrete floor, all kinds of lighting, plumbing, a bathroom. A pole barn is a pole barn. These cap rates are, in my opinion, low, and a pole barn would be higher. So I used a 8.5 cap rate. And when you divide the net operating income of $11,539 by a cap rate of 10.826, which is the loaded cap rate, we come up with a market value of $106,580. And then what we do is we divide by the assessment ratio. It's 100%, so it's still 106,580. And my opinion of value is, and I don't have the objection form in front of me, but it should read 106,600. Is that what the assessed?
It reads 5.
5.
Oh, 106,500. So my opinion of value is 106,500. Be happy to entertain any questions.
How big is this parcel?
I think it's, so one of the problems is I am having difficulty getting this computer to read my files, but I believe it's about a half an acre, and the assessor can answer better than I can.
Mike, Access Stain lists the Whalen Warehouse at 0.844 assessment acres.
So 0.8 acres, Rich, or point?
Access Stain lists assessment acres as 0.844.
That sounds correct. I stand
A little over
corrected.
3/4 of an acre. And what's the land value?
So the land is assessed, oh, I have it right here. Sorry, Mr. Chairman, I was looking on the wrong document. I have it at 0.844 acres. The land value is $168,000, and that works out to $199,052 per acre. It's zoned G2. And if I could elaborate just a little bit.
Please.
So I did find one other G2 property very close by, and it's assessed very close to the same price per acre. However, I found several properties that are residential. Those are zoned G1, and the price per acre for the residential is at 5903 Whalen, it's $96,125 an acre. Let's just round up to 100. And then 5835 Whalen is exactly 100,000 an acre. And 5813 Whalen is exactly 100,000 an acre. So those are all residential G1. This is G2, it is commercial. And so the assessor rounding up from 199,000. The assessor is assessing G2 property at 200,000 an acre and residential at 100,000 an acre. And I looked at this and I thought, what is the highest and best use? Should this be residential? Should they tear down these buildings and just sell the vacant land? Because that's really what I'm supposed to do, is value that's at not necessarily the existing use, but highest and best. And my conclusion was, just a moment. Just 1 second, I need a calculator. When I look at my opinion of value of 106,500, that works out to, if there were no buildings on it, $126,000 per acre. So you take my opinion of value and divide it by the acreage, 0.844, it comes out to 126,000. So they'd be better off selling this as commercial property rather than as residential by 25%. But realistically, I think that if this property did sell, you're surrounded by houses. I think that it would probably sell as vacant land to build a house on. And it's a good size for a house. It's 0.84 acres. The other properties around it are approximately the same. You're surrounded by a lot of farmland. And so to carve out a piece of land from farmland, it's a bit more challenging than just buying a building, demolishing it, and building on top of the land.
But you don't know the zoning?
I do know the zoning. It's
No.
G2. It's commercial.
That's commercial. How is the land zoned? What kind of commercial use can they put on that property is what the zoning tells you. What you're looking at is assessment roll classification. G2 is assessment roll classification as commercial property. That's not zoning.
I don't know the zoning. I thought G2 was the zoning.
It's not. We'll see if the assessor can help us out on that then.
I just have a question, Chair. What side of Fish Hatchery Road is this on? Is this on the west side, the Verona side, or the east side, which would be the Oregon side of Fish Hatchery Road?
It's on the west side.
West side, thank you.
Any other questions from the board?
Is that Verona schools then, or Oregon schools it's in?
I'd assume it would be Verona.
Unsure.
We can present everything when we present.
Okay.
Thank you.
We'll answer any additional questions.
I do have a question, just as a somewhat newbie on this committee. Gary, what was the first tier again that we use in this business? Explain to me what you did not use the first tier.
So the first tier in the Markarian hierarchy is the recent sale of the subject property in an arm's length transaction.
And recent is defined as what? Last 3-4 years, or?
Within the last year.
Okay, and criteria 2, what was that again?
Tier 2 would be comparable sales of like-kind properties nearby with adjustments for deviations between the two. So for example, if you had two houses right next to the other, one sold, one has 2 bathrooms, one has 1, you would make an adjustment to the comparable sale.
So that's what got you to the third tier, which was the income-based, because you couldn't find number 2, like Town of Verona or anything like that. Why did you cast your net for
Dane County.
Dane County? Okay.
That's correct. And so the service I use is called Sale Data Service. And what you do is you put in pole building.
Sure.
There is nothing under pole building. So then I went to farm, which was the exact language. It was pole barn or farm building is the exact language used by the assessor. And so when I put in farm building, I found 10 hits in the last 3 years. There was one more piece of information I did want to share with the board. I did appear for open book on August 9th. I presented all this information prior to the meeting, and I was never contacted by the assessor following the meeting, and the property was never discussed at the meeting. I never had an open book on this property, along with about 34 other property tax IDs.
Okay. I do have a question since you brought it up, something I was leaning towards anyhow. You said you looked at the highest and best use and determined that the highest and best use probably is not its current use. Did you look then for land sales, vacant land sales, that would indicate a reasonable value for the subject property using its highest and best use?
My conclusion was the highest and best use is its current use, because the way I concluded it was my opinion of value is the price per acre is $126,000 the way it is, because it's generating income. And the price per acre for vacant land is being assessed at $100,000 an acre. So I thought it would be residential, but I was mistaken. I exhausted the possibility of highest and best use, concluding this is the highest and best.
Okay. Did you search Fitchburg vacant land sales?
No. What I did is I looked at how neighboring properties were assessed.
Okay. Thank you.
Yes, sir.
Anything else?
No, sir.
We'll then turn to the assessor for her presentation on the determination of how the value was established.
Thanks.
We're each being handed 2 exhibits. One that says multiple pages from the assessor in a single page. The first multiple page exhibit will be marked Assessor's Exhibit 1 with the pages lettered alphabetically, 1A, 1B, through the end of the number of pages. The second exhibit, which is a chart with a graph on it, will be marked as Assessor's Exhibit 2. Please begin.
Okay, thank you. We have distributed written information summarizing the basis for completing the 2022 assessment of the subject property. I'll briefly summarize the written documents with oral testimony. On the first page, Section 1 is a summary of my qualifications to complete the assessment. My name is Craig Olson. I'm employed with the City of Fitchburg Assessing Office as a Deputy City Assessor. I have an Assessor 2 certification, which expires 2/28/23. I've worked in the real estate valuation industry for over 25 years. I've been with the City of Fitchburg since June 2022. I've worked as a contract statutory assessor for over 20 municipalities since 2016. The following educational experience qualifies me as an assessor. I have a bachelor's degree in business finance from University of Wisconsin-Whitewater. I've been certified general appraiser in the state of Wisconsin, and I have been primarily a commercial fee appraiser for several years. Section 2 states the purpose of the assessment and standards for establishing value. The purpose is to establish the full value, often referred to as market value, of the subject property as of January 1st, 2022. Part A outlines the standards for establishing value. State Statute 7032 outlines that the property shall be valued in accord with Wisconsin Property Assessment Manual at full value, which could ordinarily be obtained therefore at private sale, when not such sales conform to the definition of the recent arm's length sales. Part B contains a definition of market value, including criteria that a sale must satisfy if it is used in determining market value. Part C is information from the Wisconsin Property Assessment Manual that specifies that mass appraisal is the underlying principle that Wisconsin assessors should be using to value properties in their respective jurisdictions. The purpose of mass appraisal is the equitable and efficient appraisal of all property in a jurisdiction for ad valorem tax purposes. It defines mass appraisal as the systematic appraisal of groups of property as of a given date using a standardized procedure and statistical testing. And the manual notes that although similar to single property appraisal or fee appraisals, there are notable differences between the two. And finally, because there is a revaluation assessment rule, the assessment level of the subject property is 100%. On the next page, you'll find a location map illustrating the subject property's location, which is west of Fitchburg Road, south side of Whalen Road, just east of Seminole Highway. The next few pages are the property record card that contains the specific data on qualitative and quantitative physical characteristics of the land and improvements for the subject site. To note some of the more significant data, the subject property consists of a pair of pole frame warehouses. The older warehouse is a 9,000 square foot building and is leased to a masonry company, to the best of my knowledge. We did not receive a lease. The newer 1997 warehouse is a 7,000 square foot building. It's primarily owner occupied, according to the taxpayer's representative. The subject property is located in neighborhood or spot district, as we classify these neighborhoods for assessment purposes. The subject property is zoned RD as opposed to G2, which is a classification given out by Dane County. The purpose of the Rural Development District is to accommodate certain commercial uses that had developed in rural areas, including commercial uses that support agricultural production and provide a holding zone for areas that are intended for future urban development. These areas are zoned in accordance with the use designation appearing in the comprehensive plan when logical extension of utilities and facilities can be provided. This will discourage haphazard and premature development from occurring at the fringes of the city's urban service district. The existing zoning does appear to allow for the current use of the subject property. Referring back to the subject property record card, I'd like to make a couple of observations about the physical characteristics of the improvements. As I stated earlier, the subject property were constructed in two phases, 1968 and 1997. They are not identical. Both buildings have a concrete floor. To the best of my knowledge, both buildings are heated. The older building, occupied by the masonry tenant, is a 10-foot high story height, sidewall story height. It has overhead doors and steel panel exterior walls and roof. The second building is slightly higher. That's got a 12-foot sidewall. That also has overhead doors, steel panel roof, and sidewalls. The entire site is secured by a fence. I have visited the site personally and updated our photographs for digital compliance. Okay. The subject property land component is currently assessed at $168,800. The improvements are assessed at $112,600. The total 2022 assessment is $281,400. The building permit history is also part of the property record card. There are no recent building permits that I'm aware of, nor is there a recent sale of the subject property. As I said earlier, I inspected the property on September 26, 2022. The subject property site is a rectangular 0.844 acre site, 0.844 acre parcel located just east of 7 Highway and the Whalen Road intersection. There is a sketch of the subject property attached to the property record card and recent photographs. Okay. The market valuation detail summarizes the MVP cost model. Typically, commercial properties are income producing, so they are valued on an income approach. The subject property consists of a pair of pole frame warehouses. The older warehouse is 9,000 square feet and leased to a masonry company. As stated earlier, the newer 1997 warehouse is 7,000 square feet. Presumably occupied by the owner. The objector didn't provide a lease. However, his income statement is summarized both in his packet he provided to you. Most of the financials were taken directly from that. The lease rate for the older structure is $2 a square foot, or $18,000 annually. This $2 rate was extrapolated to include the newer structure with higher sidewalls. The expenses used in our pro forma were actual, with the exception of non-reoccurring maintenance expenses, because replacement expense is considered separately, and the real estate taxes, which are accounted for in our loaded capitalization rate. The base rate of 6% was used, and last year's mill rate of 0.020917 was added for a total loaded cap rate of 8.091177. The subject property's indicated value by income approach was $289,400. At this point, I'd like to point out Exhibit 2A. This is the CoStar capitalization rate study, which I provided, which indicates capitalization rates. I should say CoStar is the largest data provider for commercial property here in the United States. As indicated in the lower right-hand box, you can see that the industrial sector for the Madison market indicated a locally derived capitalization rate of 7.69%. As you can see, I added a premium to that I guess to be conservative, the subject property is a pole frame warehouse, but it seems with no obvious deferred maintenance. Based on the case law, the Markarian hierarchy states that a recent sale of subject property is the best indicator of value. If there is no such recent arm's length sale the subject property, the next best indicator of value are reasonably comparable arm's length sales. The sales comparison approach was also considered as an indication of value for the subject property. The 3 sales that I found were located at 2760 South Saline Road. This is formerly known as Perkins site, Perkins oil site that has contamination issues, but is currently being occupied by a similar warehouse. 1871 County Road MN, Fitchburg, and 2609 Seaforth Road, Madison, were adjusted and support the other approaches to value. The city of Fitchburg has commercial land sales ranging from $200,000 to over $700,000 an acre. The subject property is assessed consistently, like our other RD properties, at $200,000 per acre. The sales prices of reasonable comparable properties indicate the assessed value of $168,800 is a fair estimate of the market value of the subject property land component as of January 1st, 2022. The cost approach was also considered as an indication of value for the subject property. The subject property's depreciated improvements and land component show a value of $281,400. In summary, there is not a recent arm's length sale of subject property. Consistent with the WPAM, we prepared a mass appraisal assessment using the cost, income, and sales approach. It is the assessor's opinion that the assessed value of $281,400, with primary consideration given to the cost approach, is a fair estimate of the market value of the subject property as of January 1st, 2022. Thank you. That concludes my presentation.
Did you have any indication of the rental income on this property before this appeal?
No, sir.
Did you request that information from the property owner?
Yes, sir.
Can you tell us when you requested that information?
So we requested on 12/27/2021, we sent a letter requesting income and expense information from the property owner.
Okay.
We then sent a reminder letter on March 7th, 2022, requesting that information. We did not receive that information. Because of that, we reconciled and we chose to value it on a cost approach because we didn't have a whole lot of income data for this type of a property. And so we valued the land using the land sales. And again, that neighborhood or spot, everything is valued on those commercial properties at $200,000 per acre on the land. And then the buildings were based on the cost approach, like every other farm building in the city would be based on.
Okay, then going to the cost approach and looking at the 60 by 150 building, the one that was built in 1968. You have an effective age of 16. Can you give us some idea what was done to that building that would make the effective age 16 years?
So because these buildings depreciate out faster using this, we can either value a pole shed using the Wisconsin Property Assessment Manual Volume 2, like the farm buildings, or we can choose from the commercial valuation of Marshall and Swift. On this particular property, we chose to use the WAPM cost tables. And because of that, the typical life on the building was 38 years for a 1968 building. So it would have, if you had 38 to 1968, you're at 2006. So it would have already gone past that depreciation, but it's not. It's still in good condition. So we based it on a percent good. And so based on the 2004 effective year built, it has a percent good of 38%.
And that determination was based on your actual view?
Yep, from whoever, from when it was viewed previously, yes. It also has the additional, so if you choose the farm utility pole building classification or type, it has then standard items that come with that or what do not come with that in that cost table. So anything that, on that, a concrete floor is not included in the original base price, so we have modifications of a concrete floor. We have the 2 overhead doors on that added to that base price, and it also was heated based off of the notes that we've looked at. And that's how that building was reconciled. The second building, the 1997 building, that was built in 1997, but an effective year of 2009. That we have added the concrete floor because, again, that's the same choice in the manual for that building. We've added the square footage of the concrete floor and the overhead door. That 2009 effective year built then gives it a percent good of 50.8%. I apologize, the photos did not come through on the record card because it's a utility pole building. But both buildings, the newer building, from the photo that was just taken, I hate to say it, it looks beautiful. I mean, there's no dings in it. The siding looks relatively new. It's in very good condition. The other building, when I look at that one, the first building, that's why that has a lower depreciation on it, because it does, there's a little weathering that I can see on that building. So that one's at that 30% good, whereas the other one is at a 50%, 50.8% good. That's why there's a difference between those.
So in your overall analysis to establish the assessed value, you did not look at the income approach, you relied basically on the manual and the cost approach, and now we have an income approach because of this appeal. Is that correct?
Correct. We did not have that information when we set the values or sent the assessment notices out. During the open book period, Mr. Kohlenberg submitted a lot of information that Friday before open book was to end. We did meet with him on Tuesday and gave him the opportunity to discuss any property he wanted to discuss, and it was not discussed at that time frame.
Okay. Any other questions for the assessor?
Yes, sir. Mr. Chair, I have a question. So, Craig, you put on your chart here the vacancy rate in the lower left here. How does that factor in to kind of the way that you determine comps or determine values, assess values and things like that? I notice Fitchburg has a rather low vacancy rate of 2.9%, and Mr. Kohlenberg has in his analysis 5%, which is maybe standard. Just curious what your thoughts are on how to factor in that. How does it matter?
Sure. I also used a 5% vacancy rate. I believe there is a slight premium to what's actual in the market there. I think that the true market vacancy rate may be below 5.
Okay.
But given the history of this subject property and what I've heard only secondhand about occupancy, I didn't think that it was worthy to debate a 5% vacancy or a 3% vacancy.
Craig, when you found your 3 comps, were they difficult to find or not?
Well, we do our due diligence. It does take time. They were not difficult to find if you have the right tools.
Okay.
And I know Craig didn't go into a whole lot of detail, but after we received the income, in your packets, there is the income approach sheet that says 2022 revaluation income approach. And on here, because of the building, you have the potential to lease out that entire second building. And we had some notes in the prior folder from, I think it was the 2020 revaluation, that said that the owner actually was using part of that first building. So if you're going to use an income approach, you need to look at it as if the whole building could be leased. And so by doing that, if you look at the income sheet that Craig gave to you, he has both buildings listed and then that potential gross income. I believe to use $2 a square foot for both buildings for the entire to create your total potential gross income. If you're going to use actual income, then you wouldn't take another vacancy off of that because that's your actual income. But we were told at that time that part of that was owner occupied and using part of that for their own personal use.
Okay. Mr. Kohlenberg, any questions you'd like to ask of the assessor?
I do. So, did either of the assessors inspect the subject property interior?
No, sir.
And maybe you can help me because, again, I did make a request for a open book hearing, but it never happened. And there's a discrepancy between what the assessor remembers and what I know. We'll leave it at that. So this is a question that the chairman asked me. Did you search vacant land sales for highest and best use? Same question asked of me.
We reviewed all vacant land sales in the city and calculated those vacant land values based off of our vacant land sales throughout the entire city.
No, but specifically with regard to this property, did you search vacant land sales for highest and best use?
As I said, we analyzed all of our vacant land sales within the city and calculated that land rate. We do mass appraisal. That's what we do. So each vacant land sale has been analyzed within the city and then calculated to create a model within so that we can create uniform and equitable values throughout the city.
I understand. Specifically, and I'm not trying to be
I
difficult.
just answered your question, Mr. Kohlenberg.
Amy?
We looked at all the land sales. There's
No, I
your
understand,
answer.
but you're answering, I'm asking, did you search vacant land sales as it relates to this particular property? Specifically, did you use the vacant land sales that you've told me twice that you did? Did you use those in valuing the underlying land for this property? It's a simple yes or no.
Yes.
Okay. So when you send a letter and you ask for the income and expense, is it the owner's right to provide it or to not provide it at their discretion?
we request income and expense from the income-producing properties. If they choose not to provide it during the information, they are required to produce it if they, well, they're not required to produce it. We ask that of them. They can choose not to provide income and expense, but if they choose not to provide income and expense, and they do not provide that at least 7 days prior to the first meeting of the Board of Review, I believe is how the statute reads, then the board may deny them a hearing.
Okay, so it is I just want to be sure I understand the rule. So it's my client's right to provide income and expense if they choose. However, if they choose to appeal, they must provide it 7 days before the open book hearing. And did they provide it more than 7 days before the open book hearing?
They did.
So they were in compliance with all their rights.
Yes, I'm not
Very good, thank you.
stating no.
So when you used these 3 comps, I need to understand, what is the classification you use? Because for the subject property, you called it a farm or pole building. What is the classification for comp 1, 2, and 3?
I can look it up in the, if the board would like me to look that up.
I'd like to know, because I don't know if these are comps or not. And so if they're agricultural or farm and pole buildings, then they're comps. And if they're not, I'd like to know. Can you just tell me what the classification is, the zoning? I'm sorry, how you classified them, if they were all the same as the subject?
Comparable property number 1 is a pole frame warehouse.
It's what?
A pole frame warehouse.
Is that the same classification as the subject property?
Yes, it is.
So on the subject property, when I looked at the property record card, it was saying it was a pole farm. I think it was a pole farm or something else. Is it the identical classification, Craig?
That's correct.
Okay, and the second one?
That's also a pair of pole frame warehouses.
And the third one?
The third one is a pre-engineered steel, it appears, warehouse.
Pre-engineered steel warehouse?
Yes, sir.
And do you believe that a pre-engineered steel warehouse is comparable to a pole barn?
I do. It's a question of occupancy, and I think that the masonry company that's currently occupying the subject property is a suitable occupant for number 3, 1, 2, or 3 for that matter.
I'm unclear how an occupant determines whether or not a property is a good comparable. If it were vacant or if they had animals in there, you know, I'm just trying to understand, you're using a comp and using a pre-engineered warehouse. It's got nothing to, in my opinion, it's got nothing to do with who occupies it.
Okay, let's keep it going here.
I'm trying to understand why he's using this.
I understand what you're doing, but you must remember, they did not rely on the cost, the direct sales comparison approach. These are nothing more than to confirm what they did on the cost approach. So if they relied exclusively on this direct sales, then you could go at it full bore. They've answered enough to tell you that they are similar buildings and physical characteristics, but they are not the primary valuation method that they applied in setting this assessment.
I understand.
So any
'Cause
more detail is not going to make any difference.
It makes a difference to me because I'm going to be appealing and I need to fully understand the assessor's thought process. So does the subject property have a toilet?
I didn't do an interior inspection. excuse me.
I do not believe it has a toilet. I believe there's a porta potty outside of the building. The subject property, the one building, a few years back, I was told that the building, in order to have a landscape company come into that building, they needed to put a bathroom into that building, and we have no permit that was ever pulled to put a landscape company or contractor into that building. So I'm not even sure if the tenant using the one building has technically a right to be leasing that property for their current use.
Okay, so it has
But
no
that's not
toilet.
our department to look into.
Okay, so it has no toilet. Does it have plumbing?
I do not know. I do not believe it has plumbing.
Okay, just a moment. Your three comps,
And did you visit the property?
I'm asking the questions. The question is, for the three comps, do any of the three have toilets?
I'm pretty sure the first comp does not. I am unsure if the second comp does. Do you know, Craig?
We made qualitative adjustments to the comparable properties, as you can see. And we did suggest that the house, these two warehouses on County Road MM, very similar. We did have to make adjustments for a house that existed there. And likewise, with comparison one, that's a clearly inferior building. It's been vacant for so many years. It's on a contaminated site. If that answers your questions.
It doesn't. My question was, do the three comps have toilets? So you said that you don't know if comp one has a toilet. You don't know if comp two has a toilet. Does comp three have a toilet?
I would. Yeah, I can't tell you if there's a toilet present. I don't believe there is, at least in comp one or two.
Okay, but that would all be on your property record cards for each of them, correct?
So in commercial buildings of these, if it's listed as a commercial building, oftentimes there's a certain criteria depending on which occupancy you choose. And in that occupancy, it often will say it will include a bathroom, it will include an office, and it'll say what the typical space is for each occupancy. I do not know off the top of my head which each of these occupancies specifically are. There are very specific occupancies that you choose when you visit a site.
Okay, so
I have not visited any of these actual sites.
Okay, so is it fair to say you also don't know if any of them have plumbing, correct?
I don't know. Can you tell us if it has plumbing?
I know, I'm asking you, do you
I-
know if, no,
I
listen
don't
to the
know.
question.
We've answered your question. We do
The
not
answer
know.
is you don't know.
Yes.
Okay. So you said that the subject property is heated. Do you know, is that electric heat, is it propane heat, or is it gas?
The subject site has two propane tanks, 500 gallons apiece.
Okay. And do you know if the comparables have propane, electric, or gas?
Sir, remember, they didn't rely on this approach. You're going into minutia detail, which I don't really understand the benefit of it, whether it's for the board or whether it's for appeal.
The answer is, I'm trying to understand if these are comparable properties, and it's clear that they're not familiar with these, but they're using them as comp sales. So there are two approaches that we're looking at if these are incomparable. And if you don't want me to ask if they're comparable properties, I won't. I just want the board to disregard these as comparable sales because I have more questions about this that really pull into question whether or not these are comps and whether or not a property that has no toilet, no plumbing, and propane heating is compared to a pre-engineered building in Madison. I just don't see how that ties together. So as long as the board will disregard the comp sales, I'm ready to move on to the income approach.
Let me ask a question of the assessor. Did you rely on these comparable sales and the establishment of your assessed value?
No, we did not. We valued it using the cost approach for the building attributes that are on this property. We used the land value and the cost approach to set the value. The comps were done just to show that there are some sales out there and the average value that it would produce if we adjusted it based on a dollar per square foot type of a property.
Okay.
If you look at our comp approach, it is, the reconciled value is significantly higher. Can I use that? Significantly higher. Our assessment is $281,400. If you relied on these four comparables, the comparable market value would be $757,800, almost $500,000 higher. It would be triple our current assessment. So we just wanted to use a few comps, especially the one on Sain. Most people know that property quite well.
Correct.
And if they were able to get $77.08 a square foot for that property with contaminated land and that building, which is in much, much worse condition than these subject properties, to me, that just, there alone, without even doing any adjustments, supports our current assessment on this property.
I have one question, Mr. Chair.
Go ahead.
Does Amy and Craig, with this being zoned R2, that type of classification and some of the limits of that classification compared to the others that are business highway, the one you just mentioned, did that factor into your decision-making at all? I know you didn't use them as specific comps, but what would be the thought process if one is R2 to business highway? Because there are different things the planning department will allow you to do.
Correct. So this is rural development is the zoning on the subject. And so business highway, if you look at our comparable sheet, we consider that superior. So we did a negative adjustment because they have more ability to do more things on those properties. And comp 2 is also business highway. And then comp 3, that 2, and Craig picked these, but it says industrial limited district. But we also considered that a superior district because that was like in an industrial type of a park. So.
And when you say superior, that means more uses.
Correct.
Okay, thank you.
I have some more questions, sir.
On the market approach,
No.
please continue.
So you said that these buildings, a 1968 building and a 1997 building, even though the buildings are, one is 50 years old and one is, 25 years old, you're giving them a lesser life in the depreciation because you observe them to be in better condition than a 50-year-old, normal 50-year-old building? Is that your testimony?
On buildings, if someone were not to do anything to that building, ever, not replace the roof, not fix anything, not fix heat if it goes out, then it's going to depreciate out. So these, we chose an effective year based off of the percent good that is remaining on those buildings, and that's how they were set.
So
you look at the percent good of what's left on that based on the condition of that building is how you value commercial buildings.
okay, so give me just a moment. I have a question about what you did on the income approach based on your last answer. Just a moment. So I had shown you the actual expenses, and you said, we're not going to count maintenance in the expenses. Is that correct, Craig? I don't see anything in here for maintenance on your calculation.
What I said was that we used a replacement factor of 3% in reserves to account for short-lived items that wear out over time.
Right. That's a reserve for replacement. That's one line item. And then there is a maintenance line. So, for example, if there's a heating plant that goes out, or if a tile needs to be replaced on a roof, or if a sheet of steel needs to be replaced, that's not capital improvement, that's maintenance. And what you did is you told the board that you removed maintenance, but in the second breath, you say that these haven't depreciated as much because they're well maintained. So what you've done is you've penalized my client by removing the expense for maintenance, but you've increased the value, which is attributable to maintenance. So you've knocked down his expenses and you've increased the value of the building. How do you reconcile that? You're taking and giving both ways.
According to your own provided profit and loss statement, there was no maintenance expense associated with tax year 2020. What I said was that there were no obvious deferred maintenance upon my exterior inspection items that I had seen in the building.
So if there was no maintenance expense in 2020, and my calculation was based on 2021, you didn't give any maintenance expense for that. At least you could average it. Why did you choose that this property has no maintenance expense?
So
Sir?
there is no reserves listed on your expense sheets, okay? So
I don't even know what that
sometimes-
means.
Are they setting aside money as reserves? And if you don't know what reserves are,
Oh, Amy, I know what that means.
okay, you just
I know what
said you
that
don't
means.
know what
You
it
said they
means.
didn't set any aside, but their income statement isn't being used to establish value. Their income statement is being used, just a moment, their income statement is being used for me to create the direct capitalization approach, where I did include a reserve. So,
Whoops, sorry. What we're saying is that you don't have a reserve listed where they're setting aside on your income and expense sheet. You did not list any reserve on that expense sheet other than what you thought the reserve should be. It wasn't an actual reserve. So sometimes on buildings like this, people will just pay for something out of pocket and not actually do a reserve.
right.
And that's why we did not use that, because you had no average maintenance for the prior year, and we only have 2 years. So you did not give us a long-standing maintenance expense to say, okay, does this maintenance, what is that maintenance for? Was that to put in a new furnace? Was that to put on a new roof? We do not know if that's something that would be a typical reserve, or is that coming in and, I don't know, fixing something?
Okay, so I'm,
Just a minute. We are at the point where you must have more than enough data for your analysis for appeal. And we have heard more things that we don't really care about in detail that don't really affect the value of the property, in our opinion, in my opinion. So I'm going to put it up to the board. Do we want to continue this conversation, review of the detail, or are we ready to ask all parties to close their testimony so that we can make an informed decision based on the evidence that's been presented, and not sit here for another 2 hours listening to the detailed expense and income and questions on projects, processes that weren't used in establishing the value. So I'm going to open it up to the board.
Mr. Chair, before I vote on whether or not we should move forward or not, would a lot of this stuff been worked out in open book?
It should have been, yes.
What was the reason why that meeting did not occur?
We had a meeting on,
August 9th, Mr. Kohlenberg said?
is that the date it was?
I mean, I'm all into which building has a bathroom or not, but the chairman is right here. This is getting pretty granular here.
So we did meet with Mr. Kohlenberg, and we met with him, and originally when he called to talk about the properties, I asked him if he would like to meet, and originally he said, why do we need to? I'll provide you with all the data, we don't need to. And I said, no, I'd like to meet. And we asked him how many properties he was sending us, because we hadn't received, I think Craig received the agent auths at that point. I didn't even see those at that point. And he said like 40. And I said, well, you know, if we're going to talk about 40 properties, then we need to set aside about a 10-hour day, even if it's 15 minutes to talk about each one. And he says, oh no, when you see the information, you'll see that it's all the same. And I did all the same things. So we did schedule a meeting. I think it was originally for like 1 o'clock on that day, that Tuesday before the end of open book. So that would have been the 9th of August. And then I asked them to come at 1:30, if I recall, because Craig had a training in the morning. And they were actually in the meeting before I got back from my lunch. We moved from the Jeannie Seelig room into room 222 because the Jeannie Seelig room was being used for another company. So I do remember this day very thoroughly. We started talking about a couple properties, and when we started talking about those properties, it was all very similar, and he stated it was similar. We asked him how he developed his expense or his vacancy rate, and he said, he didn't have any calculations for his vacancy. I asked him a question, did you calculate this based off of all market data? Did you calculate your performance based off of all actual, or did you do a blend? And he did basically a blend. He didn't really answer it. And I asked him, how did you calculate your expense or your vacancy rate, and how did you calculate your cap rate? And his comment to me was, well, I don't have that here. All I brought was a notepad and my pencil. And I said, well, you should be able to tell us how you calculated your cap rate, how you developed your expenses. I said, when we look at what you provided to us on the ones that we looked at, there was like 0 to 1% vacancy. And I said, how are you getting 5%? I think he used 5 as a model. And instead, so we weren't getting anywhere. And then he said, well, I want you to remember what's the most important thing to take away from this meeting. And then he stated something like, and I just was frustrated. I'll be very honest, I was frustrated. And he said then, oh, well, you know what the most important takeaway from this meeting is, don't you? And I'm like, no, what is the most important takeaway from this meeting? And he said, oh, that my property owners own 5% of the tax base in this city. And I told him it doesn't matter if they're the highest paying taxpayer or have the highest assessment or the lowest. We're going to look at each one uniformly. And I said it's not fair to our other property owners to use a different vacancy or a different cap rate than they're being valued at when we have met with other property owners who told us that those vacancies and cap rates were correct. And then he stated to us, oh, well, I'll be having a meeting with the administration tomorrow. And he returned the next day and provided documents to the mayor and the administrator talking about a 70-75. So basically, it was my take. He's trying to intimidate the assessor to change our values based off of having 5% of the tax base for the city.
Okay, that's enough.
I get it.
What we're here for is to have evidence that proves the assessor erred. Whether there's a difference of opinion and the approach is inconsequential. And I've heard enough of this. This is the third or fourth time, and I don't want to hear it again, to be perfectly honest. What we need is hard evidence, not hearsay. We weren't at this meeting. We don't care what happened at that meeting. What we care is what you're telling the board. And I've heard Mr. Kohlenberg's testimony. I've heard the assessor's testimony. The board just has the challenge of determining, did Mr. Kohlenberg prove the assessor was wrong? You both use tier 3 or level 3 information to establish your opinions of value. And I don't really want to hear all the details of all the other goings on because it doesn't affect the decision of the board. So please focus your answers and attention to the question. Have you proved the assessor erred? And how did the assessor establish their value and was it done correctly?
So to answer your question, Mr. Chair, I would be comfortable with us kind of ending their portion and for us to kind of get to the task at hand, but I don't want to step on Rich here.
Yeah, no, I agree. I think we've been dragged down quite a bit on this, and we're dealing with items that really are beyond the general scope here.
Exactly.
Earlier, for instance, the arguments or discussions on management fees, even though they differed, they both amounted to 14%. Yeah, we spent, 10 minutes discussing that. I get a little kick out of this, though, because on the objection form, Mr.
Real quick,
Collenberg,
Rich, so are we in discussion mode, Chair?
We are.
Okay, thank you.
Mr.
Okay, go ahead, Rich.
Collenberg listed 20 minutes for the anticipated amount of time they would need, and we're at 4 times that already. We're at 80 minutes.
Right.
So I'd like to proceed.
Again, we need evidence to prove the assessor erred. Mr. Kohlenberg presented his evidence. The stuff we're going through right now has nothing to do with his evidence or whether or not the assessor erred. So we need to keep on focus. And that's the key that we need with this board, and that's the way we're going to proceed. Understood? Mr.
Yes.
Kohlenberg?
Certainly. And
Thank you.
if I may
Assessor?
respond to Rich?
Understood? I don't
Yes.
need to hear about your
Yes.
incomplete open book activity. So, at this point then, we have to go back in our time frame here to review the information that Mr. Kohlenberg presented to us so we can make an informed decision as to whether or not he's proved the assessor erred in establishing her value. So I guess at that point, I'm telling both of you we're closing the discussion and questions and answers. We're moving to deliberations. I will start. As an instructor of the income approach to value, which I've had done for 25 years for both local and national organizations, the first step in that process is to develop potential gross income, not using contract rent or actual rent, unless you can show that it's market rent. We have a lease in this property for one of the buildings at $2.50 a square foot. The assessor used $2 a square foot in their analysis of presenting the income, much less than the actual income from the existing rental contract that's on the property. On the other property, they're searching for a tenant, but they haven't found one, so they're renting it out to anybody who will use the space. We have to assume that if they're getting $2.50 a square foot for one side or one building, they could get a reasonably comparable amount for the other. If that's the case, the potential gross income that Mr. Kohlenberg is relying on is grossly understated. And as such, it leads to an error in the conclusion of his opinion of value. Whether or not he used the correct cap rate or whether or not he used the correct expenses, his starting point is wrong. If you start with the wrong entry point, you're going to get a wrong answer. That's the final conclusion of anybody analyzing an income approach to value. As I looked at the assessor's income, they used a value less than what the actual rent was on one building, and they estimated the second. I think their estimate was fair and equitable because it's an older building, not because it had a leaky roof or it had a toilet. It's because of its age and ability to rent it to a single tenant. So based on the fact that Mr. Kohlenberg is starting with improper information, the potential gross rent, he's using a contract rent, I think we have heard enough information to conclude, in my opinion, and I'll make this a motion, that we sustain the assessment because Mr. Kohlenberg has not crossed the threshold of proving the assessor wrong.
Discussion.
We have a motion and a second. I'll open it for discussion.
Mr. Chair, if you could restate for me as a rather new member of the board, our role again is to do what?
Listen to the evidence, and Mr. Kohlenberg's responsibility is to show us, to prove to us that the assessor has erred in establishing the value.
So the onus is on the taxpayer's representative.
That is correct.
Thank you.
Other discussion? Hearing none, I'll call for a vote. All those in favor of supporting and sustaining the assessment as presented by the assessor at $281,400, please signify by saying aye.
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 Please let the record note that the decision to sustain the assessment is unanimous. Mr. Kohlenberg, you'll get a form on the back of it stating the board's decision. On the back of it are other options for appeal if you so desire. Thank you for everyone for your time. Now let's please keep this appeal process moving.
Ten three.
The board is going to take a 10-minute recess while the paperwork is being completed, and we can move on to our next case on our agenda. Enough time for a break? We back on? Thank you. Back to our agenda, item 4B, Ranford Kearns, 2186 County Highway MM, parcel number 0609-244-9790-4. Current assessment on the property, $952,500. Taxpayer's opinion of value, $650,000. Here to testify are Mr. Kohlenberg, representing the taxpayer, and the city assessor and her commercial appraiser. Madam Clerk, will you please swear them in?
Please raise your right hand. Do you solemnly swear that the testimony you shall give in this matter shall be the truth, the whole truth, and nothing but the truth, so help you God?
I do. Gary Kohlenberg, 345 River Bluff Circle, Oconomowoc.
I do. Amy Mercer, City Assessor.
I do. Craig Olson, Deputy City Assessor.
Thank you. As we proceed, please remember, Chapter 70 of the Wisconsin statutes gives the assessor the presumption of correctness. The Wisconsin Supreme Court has ruled that to overcome that presumption of correctness, you need to present sworn oral testimony proving that the assessor erred in determining the total value under appeal. The Wisconsin Supreme Court has given the Board of Review standards of evidence to guide us as we consider your appeal. The standards are: the best evidence of value is a recent arm's length sale of the subject property. Next would be sales of reasonably comparable property. And lastly, all other approaches, such as the income approach on income-producing properties and the cost approach on special purpose properties and unique properties where there is not an active market. At this time, do you have any kind of exhibits that you would like to share?
I do.
Please present them to the board. Taxpayer representative has presented 3 pages of documentation. One identified as an email from Craig Olson, it's Mr. Kohlenberg to Craig Olson, who is the assessor's representative. The second page is a copy of parts of the Wisconsin statutes, Chapter 70 and Chapter 299.1, environmental pollution. And the third page is from Mr. Kearns, indicating that the assessor had been doing a routine inspection. Please, I'll have these marked for the record as taxpayers' exhibits 1, 2, and 3. Please begin.
I realized I have 2 more exhibits, Mr. Chairman. May I hand them out?
Sure. Taxpayers' representative has presented 2 aerial photographs, one in color and one in black and white. Let the record note these will be marked as taxpayers' exhibits 4 being the colored photo, and 5 being the black and white. Please begin.
Thank you, members of the board. Property address is 2182 County Highway MM. The property is approximately 8 acres. There are several buildings on the property, and it's really difficult to tell you if the photos that I handed out last are the subject property, because while trying to access Dane, the original tax key was retired. And then I put in the address, and I wasn't getting confirmed results. And when I put in the new tax key, it's not updated. So I'm working off of an old tax key number that it's just really difficult. And this created a lot of problems during the original filing, because I was notified that the tax key that I was appealing had retired, and I asked for the new one, and I can tell you I'm still really unclear on what's going on with access Dane and being able to observe it, but I believe the property, I believe that the photos that I handed out are aerial photos of the property, and if I'm incorrect, I encourage the assessor to correct me during her presentation. I'm doing the best I can with what's available. So the day before I attempted to have an open book meeting with the assessor. I had sent the email dated August 8th to the deputy assessor. And has everybody read the email dated August 8th?
If you want it in evidence, it must be you reading it into record.
Thank you, Mr. Chairman. Subject line 2182, County Highway tax ID 060924497202. It's from Gary Kohlenberg to Craig Olson, dated August 8th, 2022, 6:35 p.m. And this was in preparation for the next day's meeting. Hello, Craig. Please see attached authorization. I had attached the owner's authorization for me to represent the property owner. The property owner has extensive issues with the condition of his land, which reduces the value substantially. Number one, the property is not potable. Water from the well comes out rusty. If the water does come out clear, iron particles settle within 24 hours. The rusty condition makes the water undrinkable. Although one would think this is perfect for washing vehicles and filling tanks for porta potties, which is the owner's business. In fact, the rusty water creates a film on his vehicles that must be buffed out regularly. Furthermore, the settlement creates problems with their water tanks, i.e. clogged valves. Believing the well was the problem, the owner replaced the well and saw no improvement. The owner was informed a filtration system would potentially resolve the rust issue. However, the filtration system comes with no assurances, and the cost of the filtration system exceeds the value of the property. Number two, flooding is a regular issue. The city recognized this problem and compelled the property owner to commit to a retention pond as a condition to developing one of their buildings. It is unclear if the city excluded the retention pond during its land valuation. The bigger issue is rainwater travels down the hill in the back of the property and creates an unbuildable swampy condition on the property. The property owner estimates only 2 of his 7.9 acres is buildable. Additionally, he cannot farm swampland. The owner is requesting a visit from the assessor on a Monday morning. Please let me know your availability, and I will make arrangements for your inspection. Thank you, Gary Kohlenberg. There was no response from the assessor.
Just so we have an understanding, how is this property being utilized? I mean, I have a suspicion, but I'd like you to tell us who is the tenant or who is using these buildings.
The owner is, I think it's Bucky's Porta Potty,
Okay.
and he uses it for his own purposes. And it's exactly what you would think. He stores porta potties there and maintains them. So,
Thank you.
Certainly. On September 28th, I got a somewhat of frantic call from the property owner. And he told me that the assessor was at the property taking pictures. I talked to him about it and asked him to send me an email immediately. And I believe that the assessor visited on the same day, September 28th. And he wrote the following. Should I read it into the record?
If you consider it important, yes.
Dated September 28, 2022. This is from Charles Kearns, the property owner. A person arrived to 2186 County Road B, Bucky's Dumpsters and Restrooms from Fitchburg Assessment. The assessor was taking pictures of buildings and property. A employee of Bucky's asked the man if he could help him, and the person stated he was with the Fitchburg Assessment. The man then stated he had a meeting scheduled with Chuck. Chuck, who is the author of the document, Chuck hasn't received no documents or notifications by either phone or text requesting to set up a meeting at our property of 2186 County Road B, Fitchburg, Wisconsin 53575, and did not have any permission to proceed to take pictures of our property. Thanks, Chuck Kearns. He did tell me that.
Chuck is Charles in this case.
That is correct. He did tell me that the assessor left a document. It's on this page, and it reads, Fitchburg Assessor's Office. An appraiser from this office stopped by to view your property due to new construction / permit, recent sales / purchase, check mark, routine inspection, other. No one was home at the time of our visit, and then it's crossed out, please call 270-4235 to schedule an appointment. Thank you for your cooperation. So,
Gary, do you want to read in the definitions of what you have here in the record too? Or have you done that or not? Or
I'd be happy to.
Well, they're Wisconsin statutes, so if
We
you're
don't
going
need
to,
I do have a question. If I
you're going to rely on them,
Okay.
you don't have to read the statutes. Just tell us what statute you're looking at, and we'll accept that as
Question
acceptable.
for the chair. I have a question regarding this. I can ask now or later. It's rather quick. This
ahead.
refers to County B, which is in Stoughton. This is on County MM. Did I miss something obvious?
Which document are you looking at?
The third document about the visit from the Fitchburg assessor identifies the address as a Stoughton address.
Mine says County B.
Yes. The property in question is MM, I thought, and the same address.
County Road B intersects MM, just a short distance from this property. Can you help us to explain the difference in the address that's presented in your exhibit versus the address on the property record card?
I didn't write the document. I didn't alter it, and I did not know that B is in Stoughton. I didn't question it. All I can assume is that he thought it was B, but he's actually MM. That's what makes the most sense,
Right.
but
Yeah,
I can't speak for the property owner.
Okay,
I would assume it's an error since the street address is the same, but the address in Google Maps is on the other side of Kigansu.
please continue.
Thank you. So, I want to acknowledge that a reduction was made to the property for the back lot on August 14th, 2020.
Sir, are you going to present evidence showing that the assessor is incorrect?
Yes.
So far, you've given us a map and you've told us about some emails. I haven't seen any evidence indicating that the assessor's procedures were not correct. So please continue and show that to us.
Sure. The assessor failed to take into consideration that the property floods more than the assessor had acknowledged, and that there is environmental contamination. So, state statutes 299.014 defines environmental contamination as contaminating or rendering unclean or impure the air, land, or waters of the state, or making the same injurious to public health, harmful for commercial or recreational use, or deleterious to fish, bird, animal, or plant. Section 70.327 of the Wisconsin statute states, in determining the market value of real property with a contaminated well or water system, and the key is the water system, well is fine, the assessor shall take into consideration the time and expense necessary to repair or replace the well or private water system in calculating the diminution of the market value of the real property attributable to the contamination. This means the market value should reflect the cost to cure the problem, that is, the cost to either repair or replace the well or private water system. According to the communication directly with the property owner, he looked at having the rusty water repaired, and he said it would cost more than the value of the property. So The assessor's office did not contact me, and they did not contact the property owner in advance, but they did show up at the property. After I received the email from the property owner, he told me that he was not present and that he was talking with his employee, that he was taking pictures. I asked him to document it. He did. I then asked the assessor if he took a water sample, because there were two parts of concern to the value of the property. One was that it floods, and the other is that it has contaminated water. And he said he did not take any water samples. And I asked him if he walked the property, and it's not clear. I asked him if he went in any buildings. He said he did not, but that he did take pictures of the exterior. Based on my opinion, as a professional in commercial real estate for over 30 years, the valuation of the property should be reduced by $302,500 for the following reasons. The water is not potable. The cost to repair the situation exceeds the value of the property with no guarantee the water will be potable. The water creates problems in the daily operations of a portable toilet operation, including clogged valves, film residue when washing trucks, and undrinkable water. Although flooding issues were addressed by the assessor in 2020, 75% of the utility of the land is unbuildable and cannot be farmed. The part that is buildable gets flooding from the hill. So we have essentially wetlands and that flow onto the area where the structures exist. The assessor's reduction is 25%, and it's hard to read their property record card, but it appears to be 25% reduction for 4.29 acres and 30% for 3.1 acres. I would have discussed the notes and requested adjustments with the assessor if they would have held an open book or notified me prior to their meeting. I was not notified. I did not have open book. I am seeking a total valuation of $650,000, which reduces the land value by 50%, even though the property owner claims that he has 75% covered by water. And I'm leaving the improvements intact. And I am not seeking a reduction on the land without the building. I'm simply saying I have no dispute with the valuation of the building. So before the reduction from the assessor in 2020, the land was valued at $799,600 per acre. When you knock out approximately 25% of approximately $800,000, you have approximately a $200,000 reduction. If I received the entire 75%, let me try that again, sorry. Before the reduction was made by the assessor, the land was valued at approximately $800,000. If the land were reduced to reflect 25% usable land, which is what the property owner says he has, the value of the land would be $200,000. This only considers the fact that the land is flooding. When you consider that the water is undrinkable, it becomes worth even less because the cost of repairing the contamination exceeds the value of the property. I'm available for any questions.
Okay?
Oh, sorry. The problem is this handout was was produced very last minute. So I went on to the State of Wisconsin Department I think it was Department of Natural Resources website. And again, it was really hard to identify exactly what the property owner owns, but it is my belief that the property owner owns what I have portrayed in both the color and the black and white picture. The difficulty is this: I cannot get Access Dane to show me the property lines when I bring it up, because when you put in either the address or the tax key, it just doesn't work. So I took a stab at it based on the property record card and the fact that it's 8 acres. So on that website, they don't quite call it wetlands, but it's, say that it is prone to flooding. So the pink dots represent prone to flooding according to the website with the state of Wisconsin. And then the black and white, I wanted to know how close I was to that 7.8, 7.9 acres, and it's a pretty close approximation. So you can see that most of his property is prone to flooding, and then what happens is he can't farm it, can't utilize most of it. It looks like he's got a building there, which is pretty remarkable, but after it floods, it washes down the hill and it creates all kinds of problems for his operation. So in summary, there are 2 reasons I'm seeking a reduction. One is he can't use the land, 3/4 of it, and number 2, he can't drink the water, wash his trucks, or even fill his porta potties without problems creating with clogging valves. Open for questions.
Okay. I'll start because I have a number of them. You had mentioned environmental contamination, but you didn't address that in your conversation. What environmental contamination are you talking about?
He can't drink the water. It's not potable water.
Okay, so it's not like somebody dumped residue on the property and it's soaked in and the soil is contaminated.
Well, it doesn't, but according to the state, it defines environmental pollution as, just a moment, unclean or impure water. And then it states that in determining market value, with a contaminated water or well system, the assessor must take that into account.
Can you provide us with an analysis of the water showing what contaminants are in it?
No,
Why not?
he didn't provide it.
Why didn't you ask for it? You're asking us to make a determination on the water's non-usability. We need evidence showing us what is in that water and why it's not usable.
So that was why I wanted to meet with the assessor. I asked him, how can you prove that the water is not usable? He said, come over, I'll turn on the faucet, and you're going to see rust come out of the faucet.
Okay,
So that is why I asked the assessor to meet me on a Monday morning so that I could turn on the faucet, be there, examine it with him and the property owner. Instead, the assessor showed up without an appointment, never took a water sample.
Is
Okay.
that the role of the assessor to do water samples?
No, it is not the role of the assessor to do a water sample. However, I wanted him to do it so he could see it with his own eyes.
I understand what you're saying, but what I'm also saying is you want the board to consider that factor. You should have been presenting us with a professional analysis of the water so that we could determine what is causing the problem and potentially then looking at a filtration system to clean it up. Second question is filtration system. That would be one pretty, I don't know how to describe it, but other than large filtration system, if it's going to cost over $700,000 to clean it up. I've lived in areas where we've had water issues similar to this, and they were done not cheaply, but certainly not in the range of $700,000 to clean up the residue and make the water drinkable. So do you have a cost of the filtration system that would be required to clean up this water so it could be used in the way that the property owner would like?
The only information I have is what the property owner told me, that when he had somebody stop out, they said it would be more costly than the value of the land.
Okay, so you don't have any concrete evidence showing a cost to cure.
That is correct.
Are there any retention ponds on this property?
It is unclear.
It's unclear if there's retention ponds?
That is correct. It is unclear. I wanted to discuss the property with the assessor. We never had open book.
So have you visited the property?
I have not.
So you don't know if there's any retention ponds?
I do not know.
Okay. You've mentioned that the property floods, and I can understand that's when you have a property at the bottom of a hill, it floods. But you're also then claiming that it's in a floodplain. Do you have floodplain maps to show us that we can look at and see exactly where this property sits and whether or not the extent of the floodplain area it's in?
So I did not say it was in a floodplain. I said that the website identified the pink dots as, and I think the phrase was prone to flooding. So the best I can give you is documentation from the state of Wisconsin that has identified this as prone to flooding.
Typically prone to flooding means it's in a floodplain. Typically.
I would tend to agree. However, that was not the language that they used.
Okay. Any other questions by members of the board?
A broad professional question. Why won't you drive by the property, or how do you do your business? You don't go visit these properties before you submit applications on their behalf, or?
So
Let me give you an example real quick. I know the area that was talked about last week on Trey, I can't remember the name of the apartments. I know that area well, but I also drove by there immediately after this meeting just to double check. And I did see that drop. I'll stay on task, Mr. Chairman, I promise. I saw that drop. Isn't just professionalism and intellectual curiosity for you to go check these out?
I did. I checked out all of the apartment buildings, which represented most of the appeals, and here's exactly what I do. I'm going to tell you exactly.
You've answered.
Well, no, I want to answer his question.
Well-
Why wouldn't I check it out? I'm going to tell you exactly what I do. Just prior to the meeting with the assessor, I do go to the properties. There was no meeting with the assessor. And so I can tell you that that process has worked for me really well for 15 years. I had 37 appeals at the assessor. We talked about, I think, 2.
Okay. It's not a critical issue because it doesn't affect the value, so I'm not going to cut you off. I'm just going to say, discuss it outside the discussion on the board, okay? Any other discussion or questions from the board of the property tax representative?
Yes, to the task at hand on the water quality issue. What you understand is you have a two-part concern here. The flooding issue, even though it's not in a floodplain, or you didn't say that, but we don't have maps for that. But 2, rust in the water. Okay. And you're basing the rust in the water would be what would cause a diminutive value to a property.
The water is not potable, correct. He also identified sediment in the water in addition to rust. So when it comes out clear, it has sediment, and that sediment affects his operations and would affect anybody's operations.
Okay.
I have a question. When was the first time you brought up the topic of the water being non-potable to our assessor? Two-part question, that, and when did the owner first bring it up to the city for that issue for as far as the assessments?
I brought it up on August 8th, the day before meeting with the assessor.
Okay.
And I don't know when the property owner brought it up.
Or has he?
However, he did bring up the flooding, and an adjustment was made in, I believe, 2020. So I would imagine he'd bring up both issues at that time.
Please remember that's an estimate. Taxpayers' representative wasn't present, so we don't really know when the city first heard about this contamination or what is being called contamination in the water. Anything else?
No, sir.
Okay, if not, then we'll go to the assessor for the presentation as to supporting the assessment and how it was established. And for brevity, we are going to accept the documentation of the assessor's experience, so it doesn't have to be read into the record. We will stipulate that based on experience and credentials, the assessor is a qualified assessor under the statutes of the state of Wisconsin. As we've all heard it numerous times, we have a good understanding of the staff's and the city assessor's qualifications. The document that's been handed to me will be identified as Assessor's Exhibit Number 1. It's multiple pages, so again, they will be identified as we have in the past, with the first page being lettered as A and continued on to the last page in the handout. Please begin.
Thank you. We've distributed written information summarizing the basis for completing the 2022 assessment of the subject property. I will briefly summarize the written documents with oral testimony. My name is Craig Olson. My qualifications are in front of you, summarized in written form and stated previously. Section 2 states the purpose of the assessment and the standards for establishing value. The purpose is to estimate the full value, often referred to as market value, of the property as of January 1st, 2022. Part A outlines the standards for establishing value. State Statute 70.32 outlines that property shall be valued in accord with Wisconsin Property Assessment Manual and at the full value, which could be ordinarily obtained, therefore, at private sale, when such sales conform to the definition of a recent arm's length sales. Part B contains a definition of market value, including criteria that a sale must satisfy if it is used in determining the market value. Part C is information from the Wisconsin Property Assessment Manual that specifies that mass appraisal is the underlying principle that Wisconsin assessors should be using to value properties in their respective jurisdictions. That, quote, the purpose of the mass appraisal is the equitable and efficient appraisal of all property in a jurisdiction for ad valorem tax purposes. It defines mass appraisal as a systematic appraisal of groups of properties as of a given date using standardized procedures and statistical testing. And the manual notes that although similar to the single property appraisal or fee appraisal, there are notable differences between the two. And finally, because this is a revaluation assessment year rule, the assessment level of the subject property is approximately 100%. On the next page, you'll find a location map outlining the subject property's location. As previously stated by the tax representative, this is property was divided subsequent to the 2022 January 1st assessment, and the small rectangular box is a child of the parent parcel for the subject property. But in fact, the subject property in this case does include the larger 7.9 acre parcel.
Yeah, so on the map, the area in red is what shows up. This parcel was actually split into two parcels after January 1. So the parcel we're discussing is the area in red, and then that kind of upside down L-shaped area directly north of it. So it's that much larger rectangular area.
So we're clear. This map shows 3 buildings.
Correct. It's the area with all three buildings, and there's actually it doesn't show up very well, but there's a building in the back also in light green. So the three buildings in red, the one in the red area, and then the two buildings directly north of that. And there's kind of about an inch away from the middle pink building is a tiny little green spot. That's an additional building.
Okay. Everybody clear their
3.
the map? This one.
I don't see it. Oh, backwards. Thank you. I'm clear.
Okay. So for 22, we're looking at a 7.9 acre parcel, which includes the area that is identified with the two, on my map they show up slightly pink buildings, and then the area directly, in this case south of it, which is highlighted in red with a dot in the center, as well as then going around and about that area is identified with a green line.
Correct. It's a 7.39 acre parcel.
Everybody got that? Thank you. Please continue.
Thank you. On to the subject property site itself. The property record card on page 1 identifies the subject property zoning as BH, a business highway. Lands placed within these districts take the form of clustered or strip commercial areas. Land extensive development, land placed within these districts takes the form of clustered strip commercial areas, land extensive development patterns of retail, service, warehouse, light industrial uses, most of which are highway oriented. While serving these functional purposes, these areas also serve as gateways to the city of Fitchburg. Design review will seek to create as much attractiveness as economically feasible and consistent with the functioning of the business. Now, onto the improvements themselves. There are primarily 3 steel-clad warehouses on the property. Building A, which I described as the wedding rentals warehouse, was constructed in 2005. It has a substantial retail and office development component, or office component. The retail showroom, I would say, shows arbors and things that support the wedding operation in that building A. Building B is the center building. It is the portable restroom warehouse with office, constructed in 1980. These are light commercial utility buildings, as the property record card describes. They have space heaters in the warehouse units and forced air in the finished office component, which the building B also has a significant portion of finished area in it. Building C. This is what I would describe as a flex space type warehouse constructed in 1981. It is, to the best of my knowledge, recently approved for a fitness center occupancy. Like the others, this is a steel-clad building with an undetermined amount of finished space inside of it. The last building on the property, which actually I wasn't aware of because of how far it's set back. The fourth building is a 1,440 square foot pole building constructed in 1980. It's located well behind the primary improvements. Overall, the improvements of these buildings appear to be well-maintained, no obvious deferred maintenance, and it appears they were recently painted. The subject property is located in a neighborhood or spot district on the city's south side. I did visit the subject property site. I wanted to address the confusion as to a board review or meeting, for that matter, with the property owner. As you'll notice in the email that was sent to me, Mr. Kohlenberg suggests that I meet with the subject property owner on Monday morning, but the email was sent on Monday night. And so that didn't do me a lot of good, in my opinion there. I was not aware until Friday that there was any claim of water quality issues. Never had heard of that. I can also say that as I was inspecting the subject property site, we've had quite a bit of rain over the last several weeks. I saw no evidence of standing water. And further, there is no hill that I'm aware of, to drain excessively onto the subject property site as I look at a topographical map. Amy, would you like to add something there?
Yeah, and if you look at Access Dane's map, we don't have a copy for you, but that area is on their map. If you click on the FEMA floodplain areas, it's in pink, which says the legend says it's 1% annual flood chance area. And so I know I had asked Craig when he came back, is there a retention pond? He said no. I said, is there a detention pond? He said no. So there's no, he saw no physical detention or retention pond on this. I drive this area every single day, and I do not recall one time I've seen water on that back section. So.
If I could add, we as officials with the city take our responsibility seriously and act with the utmost respect of the property owners. I did leave notice of my presence on the property. I did not go inside the property. I did speak with 2 staff members, in fact, making them aware of what my purpose there was. And so that's something I wanted to address before we get into the valuation itself. So if you'll notice, beyond the cost breakdowns and local grade, depreciation tables, so forth, we get into income. The income was the primary consideration in this valuation based on pro forma. I wasn't given any income history on this property, but if you'll see my income approach grid, I have 2 of them. And I've identified what the economic rents are, in my opinion, for the 3 different buildings, that being the wedding equipment rental shop, the porta potty shop, and what appears to be unoccupied flex space at the time. The only difference between this really and the second one is that I was unaware that there was even a pole building on the site. And I attributed marginal rents to that building at $2 a square foot, not unlike comparatives, I guess, that we've had recently here. Going through the income statement, I did, contrary to the CoStar report, which suggests very low vacancy for the Madison metro area. In fact, it's 3.53% according to this CoStar study. I did use a 10% vacancy loss in collection. Now, why would I do that? Except to say that some of the occupancy there may not be that desirable. to be next to if they were in fact going to lease this out to a fitness center. So I think I was generous with my 10% vacancy and collection loss. Next, as we work our way down these expenses in yellow, management is standard. Reserves I gave 3%. I even included a 2% other category as a catch-all. I'd like to compare the CoStar report industrial study, which indicates an industrial capitalization rate locally derived of 7.69%. I used 8%. We've made significant reductions to the land value that, in years past, but nonetheless, my capitalized value for the subject property, according to the income approach, $952,500. If I was, and we are not, including this marginal pole building to the back in our original assessment, our assessment would actually be $981,700. Now, how do I support my rental pro forma? I would point to the property located at 2652 South Seminole Highway. As you'll note, this building is listed for lease at $4 a square foot. Secondly, the next building, which you can see by the photos, if you have them, located at 875 US Highway 51, also support the rental rate that I've used. And that's at $5 a square foot. And you can see from the condition of this building, this has had some very intensive uses, and well, it appears to have significant deferred maintenance on it, even at that rate. Let me take a break here. I had another comp, I thought. Okay. I just wanted to make sure that we're finished talking about the income approach, and I'm happy to answer questions as we go forward. There was an additional rental that I'd like to point out located at 300 Commerce Parkway. That's in Cottage Grove. And sometimes we have to use, blended data to support our very specific subject property, and that is in fact at 750 triple net.
And Craig, triple net is electric,
Triple net being where the tenant is responsible for all expenses.
okay, electric, and what are the other two?
Everything, common area maintenance, grounds, electric, regular routine maintenance, you name it. Okay?
You're prepared for questions, sir, or no?
No, sir, I'm not quite done.
Okay, all right.
Okay. Based on case law that the Markarian hierarchy states that a recent sale of the subject property is the best indicator of value. If there is no recent arm's length sale of the subject property, then the next best indicator of value are reasonably comparable arm's length sales. The sales comparison approach was also considered as an indication of value for the subject property. 3 sales located at 521 North Stevenson Street, DeForest, 305 Industrial Circle, Stoughton, and at 1585 Greenway Cross, Fitchburg, and 909, did we include 909? Mm-hmm. 909 Jonathan Drive, Madison, were adjusted. And without getting into a great deal of detail, they do support the other values. The sales comparison, in fact, produced a value of $1,091,500. Again, the primary consideration in this was, in fact, the income approach. I guess that the cost approach was also considered as an indication of value for the subject property. The subject property's land component and depreciated improvements show a value of $791,300 and $352,500 respectively, for a total of $1,143,800. In summary then, there is not a recent sale, arm's length sale of the subject property. And consistent with WPAM, we prepared a mass appraisal assessment using the cost, income, and sales approach. It is the assessor's opinion that the assessed value of $952,500 is a fair estimate of the market value of the subject property as of January 1st, 2022. Thank you. Do you have anything to add?
The land, if you go back to the market valuation detail, the land, we actually have two records on this. So we were trying to accommodate for the area that has the buildings on it versus the area behind, that in the past they've told us has water in that area. So we have two land records. The land record of 4.29 acres, that is valued at $200 per acre for this neighborhood or spot neighborhood, and has a 15% negative influence factor for occasional pooling. The other land record also actually has 3.1 acres at $200,000 an acre, and then that has a minus 60% discount and also another additional 30% discount on top of that. So that 3.1 acres of that area is valued at 10% of market value. So we have significantly altered the land value on this property.
So in your opinion, the building site is approximately 4.2 acres, 4.3 acres?
I believe that's how we calculated, if I remember.
Before this recent split?
Yes, yep.
And the secondary lands, which appear to be recognized as having potential water issues, is listed then as 60 and 30% adjustments to that base value. As you said, that would bring it down to roughly $20,000 an acre.
Correct.
Okay.
So we can create more than one land record in order to try and accommodate that, so that the area that's really buildable, we can value that appropriately. An area that may not be buildable, we apply the influence factors to that. But we did include also on the area that's buildable and where the buildings are, that area also had that minus 15%, because there is the 1% annual flood chance area. So that means it's going to flood very, very seldom, but there is a chance that there's a potential it could flood.
Okay. Question for Craig. Did you speak to the owner when you were at the property?
No, sir.
Did you ask to speak to the owner?
Yes, sir.
And what response were you given?
The owner wasn't present.
Okay, so you couldn't speak to him if he wasn't there.
No, sir.
But you did identify yourself to the employees, so they knew that you were there, and left identification with callback number if they wanted to talk to you.
Yes, sir.
Okay. Follow-up question on the parcel has been split. Is that property for sale?
No, or not that I'm aware of. So they split, the Branford Kearns owned the property with, I believe, Richard B. Kearns. So now the one area, I believe, to the north, that parcel is owned by Branford Kearns now. And then the other parcel that just has one building on, the more southerly parcel that was outlined in red, that's owned by Richard B. Kearns. So I know he refers to Charles. I'm not sure if Branford's middle name is Charles and he goes by Charles. I'm not sure. We have the owner of record as Branford Kearns and Richard B. Kearns.
Okay. So there's no sale of any parts of the subject property?
Not that I'm aware of. I know one of the buildings, I believe they just and I'm not sure if it has to do with the split, but I believe one of the buildings has now been leased or was going to be leased to a CrossFit type of a gym.
Okay. So in your analysis of the information, even though you had what appeared to be reasonable comps or some comps, you didn't rely on those because of what? Why didn't you rely more on the cost of, why did you rely on the income approach versus putting more emphasis to the direct sales comparison?
Because originally we don't have a whole lot of sales for commercial properties. And so when we set values, we'll look at the sales on vacant land in order to set the land values. And then we will look at, most commercial properties are purchased to be income producing. And in order to maintain that uniformity and the equitability, we actually value using an income approach typically on commercial properties. We always list all commercial properties or all properties, so they're all valued. They all would end up generating a cost approach based on the sales of the land and the buildings. And then we ask for that income. We did ask for income and expense on this property. And we did, let me just make sure I don't speak out of turn. So we requested income and expense on December 27th. We sent a reminder letter on March 7th because we hadn't received any. And it is primarily, I believe, Buc-ee's is owned by the two brothers. One has been used, I believe, as a rental, tents and rentals for weddings and things, and the other was used for porta potties. So like they actually have two personal property accounts and two distinctly different legal entity names.
Okay. It was brought up that there's a water problem on the site. Were you aware of this?
No, I don't have any information other than what Mr. Kohlenberg has stated in the email. We have no cost to cure, no information pertaining to it. I didn't see anything in the file folder, unless Craig did, but I didn't see anything or any correspondence that has ever been stated that there's poor water on the site. And if there is, then, that's a concern if they're going to have a CrossFit gym on the property.
Okay. Any other questions of the assessor from the board?
I do. I just have a brief question. Thank you for answering that question. So the rust in the water has never been factored in the assessment in the past?
No.
First I've heard of rust on the property.
That's the first I've heard of it. I know they said I thought he stated that they thought it was the well and they fixed that. So I'm not sure what the cause is. And we don't test, assessors don't test water.
Right.
That's
It's not in your
something-
training, is it?
No, we value a property, anything with contamination, water issues. Typically, the property owners would present a cost to cure for that and a report and, so that we could consider it, but we have no documentation.
So even if Craig would have received that email in a timely manner instead of Monday night, instead of meeting on Monday, would he have taken Mr. Kohlenberg up on that to go look at the water and that kind of stuff? How does that?
If we'd have factual documentation, so if someone could provide us with documentation, and then not only do you need the documentation, but you kind of need a cost to cure for them to go out and find what is it going to cost to fix the problem if there is a problem.
Mr. Kohlenberg also stated that the property has flooded areas that there's a small space for commercial use. So he said, I think I'm paraphrasing here, that his clients wouldn't be able to farm on the property. Is that even an option, or?
No, it's zoned business highway, and the city would not.
They would
tell
say
them
not
it's a
allowed.
non-conforming use, and they wouldn't be able to farm that. They'd have to go through a zoning change.
So that's nothing that you would have considered in your department?
No, it's zoned completely different. If they were to do that, then the city,
Have-
it would go through planning and that whole process. We have to value what's actually there.
Sure.
So if, like in a new subdivision, if they're still tilling it, we would value it as tillable. But that would go through then the planning and zoning department if it was not an allowable use. But under that zoning, it's not a use under business highway,
Okay, so there's no farming that would be allowed on that piece of property.
not that I'm aware of.
Okay, thank
Any
you.
other questions from the board? Mr. Kohlenberg, you have any questions for the assessor?
I do. This is for Craig. How did you know to visit the property? Did you receive an email, or did Amy instruct you?
To do my due diligence, in almost all cases, I will visit a property just for physical condition, observing the physical condition of the property, and that's a normal course of business.
So my question was, how did you know to visit the property? And the timing of your visit is imperative. So you visited the property the day before the property was scheduled for Board of Review. So were you instructed by the city assessor, or did you end up with the email? How did you know to go to the property the day before the Board of Review hearing was scheduled?
Sir, I would ordinarily do this type of inspection in my normal course of business, as I stated.
I'm just asking, did Amy ask you to visit the property?
No, sir, I visit the property on my own fruition.
Okay, and was that because we had the Board of Review scheduled for the following day?
In the course of my due diligence, I like to visit the properties whenever possible. And with 50 appeals in just a few weeks' time, I'm going to get to those properties as soon as I can, and that's when I got to the property, was as soon as I could.
Okay. Did you say to the employee that was there that you had an appointment with Chuck? That was his quote.
Sir, I met with an employee in Building A, which was the only occupied building. I identified myself. I wanted to make them aware of what I was doing and be as little intrusive as possible. That employee informed me that the gentleman's name that I would like that would be most informative to me would be the gentleman by the name of Chuck, who I'd never heard before. I'm unfamiliar with the name Chuck. But as I was walking the property and taking pictures from the various angles, as I always do, I incurred another employee who asked me what I was doing. And I said, "Sir, is your name Chuck?" And he said, "No, Chuck isn't here." And so I said, this is for a second time to the second employee, "This is the scope of my work. This is the reason for my visit today. I clearly identified myself, and I left documentation on the door."
So my question is, did you tell any employee that you had a meeting scheduled with the owner?
No, sir. I didn't tell any employee that I had a meeting scheduled with the owner. My only reference to the owner himself was a brief encounter with a second employee where I said, I'm looking for Chuck. If you're Chuck, I'd love to talk. But I don't know who Chuck is, and I hadn't been unaware of his relationship to the ownership of this property. I didn't tell them that I had a meeting scheduled, no, sir.
Okay,
Did you have an email?
Mr. Kohlenberg, we're here to address the value.
I understand.
Please focus on value points, or I'm going to cut you off.
I understand. So in my email, I addressed two issues. One was the flooding, and one was the contamination. Did you ever see the email that I sent on August 8th prior to visiting the property?
I don't recall if I saw the email. My reason for visiting the property is just my due course of business, and when I'll visit a property so that I can speak knowledgeably. This was not a trigger for me to visit the property. No, sir.
So you were unaware that there was a contamination problem, is that correct?
I don't have any documentation as to a contamination problem. I was unaware of a contamination problem.
Thank you. You were confused why I would ask you to visit the property on Monday, and I had sent the email to you on a Monday evening. I don't get it. You just said that you were unaware of the email. And then prior in your testimony,
Okay, I'm going to cut you off.
But-
We've heard his answers. I'm telling you, focus on value. He inspected the property, he got pictures. We've got that on the record. He didn't talk to the owner. Please focus your comments and questions on value.
the value of the property is directly determined by the contamination of the water.
And
I
you've
have
heard
one-
the assessor's office say they didn't know about any contamination of the water, establishing their value.
I understand.
That's on the record.
I understand. I informed the assessor a day before the open book schedule that the property water was contaminated. And I just want to go on the record saying I didn't ask him to meet that Monday, the exact phrase, and it makes a point. The owner is requesting a visit from the assessor on a Monday morning. I didn't ask you to visit the property after the time had passed. My next question.
May I answer that?
No,
Okay.
enough has been said.
After you had the appointment with after you visited the property without an appointment, where you were completely unaware of a pre-existing email that you referred to in your prior testimony that you didn't understand why I would ask you to visit on a Monday afternoon, which is inconsistent, what did you tell the city assessor after your visit to the property?
Again,
Is this
where
relevant to
is the
us?
value issue here? This is a issue that doesn't
All right,
show
I'll
any
ask a
point
different
to
question.
value.
You said, Amy, you said that the property, that about half the property was reduced by 60% and then by another 30%, totaling 90%. Is that what you said prior?
The value was not reduced during open book. Those were the influence factors we had on this property.
No, I didn't ask about open book. I asked if the property was reduced by if you said the property was reduced by 60% and then another 30%.
I answered the question
I'm
and
not done asking
explained
the
it to
question.
the board already. I think you need to listen when we explain things the first time.
I'm asking you
I
a question
explained there
because
are
it wasn't
two
clear.
records.
What was the 60% reduction for? Was that a zoning reduction?
It says zoning on here, so it's a restriction. So whoever typed it in, pick the zoning on it.
But was it for zoning or was it for something else?
I didn't place that on there, so I do not know specifically who placed that note on there. So I can go back and try and search it out.
So if it was a change due to zoning, it had nothing to do with the flooding. Is that correct?
I already explained, both properties have an influence factor on them for prone to flooding.
Okay. In your opinion, who is in a better position to determine whether a property floods? Somebody driving by a highway or the property owner?
Okay, I'm going to stop you right there. She is not a professional land or water engineer. You're asking her to do something that's well beyond the scope of her duties. You've heard the answer that the value has been adjusted according to their prior records indicating there were water issues as far as flooding. Again,
I have no
You
further
a-
questions.
okay, if you're going to speculate, please do
This
it
is not
outside the board.
speculation. I'm asking the assessor a question, who is in a better position, the person driving by on a highway or the property owner, to determine whether or not the property floods. And you don't want me to ask that because apparently it's got nothing to do with the value of the property.
The DNR would be the person. So FEMA, and according to Dane County's map, it is in pink that says 1% chance of flood, and that's why it has the prone to flooding influence factor. So we
No
are
further
basing it
questions.
on the best information we have available, which is off Access Dane's FEMA map.
Thank you. At this point, I'm going to close testimony and bring our board into the element for consideration as to deliberations.
Can I start? As I was reading the packet over the weekend, this was the one that I thought was actually going to go pretty quick and easy with the potable water issue. I thought that really struck me, and I was anxious to hear what happened. Now, this has been 8 weeks, since August 8th till today, or till tomorrow, or whatever, but it's been 8 weeks, and nobody's done anything, and the burden of proof is still on the landowner or his agent. And somebody, to me, it would be a valid reason to change the assessment. But without any proof, we cannot overwrite the assessor's opinion. So I guess I'm disappointed that there was nothing being offered that was real proof about the water quality tests or anything like that. But I haven't seen anything. I don't know if I missed something, but I don't think so. So I'm disappointed that there wasn't any proof on that, because I'd like to see us once in a while go the other way. But again, I didn't see anything to want to change or reason to change the assessor's valuation.
I agree with what your comments are. You want to make that a motion? I'll close discussion and we'll take a motion on the evidence that was presented today as to the value of the property under appeal.
All right. See if I word this right. I move we accept accept the assessor's valuation for the property of for Brantford Kearns, 2186 County Highway MM.
And that value is?
$952,000 and $500.
Okay, we have a motion. Do I have a second?
I'll second.
We have a motion and a second. All those in favor of sustaining the assessment as presented in the motion, please signify by saying aye.
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 Please let the record note the assessment is sustained at its original value. And as again, the clerk will provide the taxpayer's representative with a notice of the board's decision. On the back of that decision sheet is the opportunity and listing of appeals beyond the board, if he so desires, in carrying this case to the next level. I thank all parties for their attendance today. And at this point, we'll move back to our agenda for the next item for consideration.
Thank you, Tracy. I don't have anything left today, do I?
We may need the clerk in this conversation here.
Paperwork has been completed. We will then move on to agenda item 5. Consider new business. Consider act on scheduling a board review dates if necessary. Since this board has been open for a while, I'm going to ask the assessor and the clerk, have there been any new appeals that have come to the board?
There have not, no.
Excellent. Thank you. Our next meeting date has tentatively been scheduled for the 7th of this month. We need to make,
What time are we looking at, Mr. Chair?
It was talked about at 8:30 for a start time.
8:30 on the 7th.
I may have to zoom in on that one, and then I have to probably get off of that one by 12:30 or 1. Rich, are you in town?
I'm leaving the state this weekend, so I have to leave the state, otherwise my wife's going to kick me in the butt.
We don't want that to happen.
But
Can we,
if there's a quorum, could we just verify that, will there be a quorum? Could we check with Ryan and Elton? And then, or I guess we really can't plan a meeting without checking with them, without knowing. And
you have 3 needs a quorum, right?
That's correct.
Okay. Let's schedule it tentatively for the 7th.
Let's do 8 a.m., can we? Just to get rolling.
Sure.
I'm good with 8.
Good with 8? Okay, 8 o'clock.
see, there's 3 of you,
October 7th.
right?
Madam Clerk, is it possible, not to make glib of this situation, but if somebody did the 8 to 11 shift and somebody did the 11 to 1:30 shift or something or not, can you do that if people have to dodge off the meeting or not?
You just have to hear the entire case in its whole.
Okay, thank you for that answer.
So
Can't come in midway.
you can't come in midway and you're not supposed to leave
What
midway.
is the scope and size of our agenda on Friday?
Substantial.
We'll be discussing with Attorney Seibel. We may request to waive everything to circuit court.
And that gentleman is with,
Oh,
Right.
well, we have to review the
subpoena.
additional subpoenas that are due on the 5th, so that'll be on the agenda. And then the remaining, other than the one of Bowman Plaza, the remaining 23 cases are with Mr. Kohlenberg.
So you'll have the Bowman subpoena, the 3 subpoenas from Kohlenberg that are due on the 5th, and then the remaining cases for Kohlenberg.
he has 23 outstanding cases.
Yes. And we may decide to waive all 23 to circuit court.
Okay,
Agree, if the board agrees.
okay. So there's no need at this time to schedule any additional meetings at this time?
I think we can wait until Friday if we do need to schedule additional meetings.
Excellent.
Okay.
October 7th.
So if that meeting, it sounds to me, is going to be like the last one where we're pretty much the entire day. Is that accurate guess?
Rich, you can call in from the road, you know.
Not for my car, I drive.
Okay.
I hope not.
I did a meeting from,
Yeah, give me that bottle of
Well,
beer.
please remember, we're still on the record, being broadcast. We'll save our discussion for
God will clip it out.
safety on the road later. So we have a date and a time. All those in favor?
Of adjournment. So
Well,
moved.
We don't adjourn, we postpone.
Postpone.
We're going to postpone with the understanding that the clerk will reach out to the other members of the board who aren't here today, make sure that we have a quorum so that we can gather again and reconvene the meeting at 8 o'clock on October 7th. And if people are here and they have to leave midway, they could leave after a case has been completed. And we could, hopefully, they'll still have a quorum with others who can stay longer.
And Madam Clerk, you need to find out a quorum within 48 hours in advance, right? That's Wednesday morning at 8 a.m.
Correct.
Okay.
So with that, it's now 4:06. I will postpone this meeting of the board until October 7th.
Thank you.
And we should be off the air. We're off.